Good morning, everybody, and welcome to today's midweek update. What do you think about that entrance music? I kind of like it. One of the things that I like about it is that they allow me to play it. So let's dive into the markets here and let's talk about things. I think that there's a time for everything, well, when it comes to the market. And the time that the market is telling us that it is right now is that it is time to wait. There's a time to grow, there's a time to sit, there's a time to harvest, and there's a time to wait. And right now is a time to wait. The market has been biding time for a little while now. And the better move has been to simply sit and wait, to sit with trades that are winning, to cut the ones that are losing, and to mostly sit and wait. So, what are we doing right now? We're sitting and waiting. We've got a chart up for the NASDAQ, and the NASDAQ has been steadily grinding its way higher. But if you notice something, and we spoke about this on yesterday's Trade Smart Tuesday, there is this indicator down here. Do you guys remember what that is? That is the number of stocks making new 52-week highs versus 52-week lows. And what does that tell you about the current market? If you remember, type into the chat. Let me know. What that tells us about the market is that it is fairly thin, right? So even though you have the NASDAQ making fresh highs, it doesn't mean that there's a whole lot of participation in the market making those new highs. So what does that tell us? That tells us that we need to be extra selective in what it is that we're going to trade, right? Because if we just go out, we start picking anything, then we have a stronger chance of giving back all of our hard fought gains. And the market has had a pretty strong move here over the past couple of months, right? Well, from April and May, June, now we're into July. We've had a pretty strong move. If we start to go heavy now while the market is thin, then we're liable to give back a lot of those gains, and we don't want to do that. So we need to pay attention to what the market is telling us. The market is telling us to hold our horses, to participate, but to be cautious. If we only paid attention to new highs and new lows, it would be pretty foolish, right? Well, we don't want to pay attention to any one indicator. Let me know if you've heard this, and let me know if you're one of the people that do this. If you are, I'd love to talk to you. But one of the things that I hear is people just put price on their charts. They don't look at volume. They don't look at moving averages or anything else. Let me know if that's you. I'm curious to hear thoughts on this. Personally, I don't think that gives you something that's robust enough. I understand wanting to be as simple as possible. Uh, I try to be as simple as possible as well. But there's also something to be said for being robust. That doesn't mean being complicated, but it does mean that we want to have multiple levels of confluence, something that's telling us that, yes, we are moving in the right direction, that what we're analyzing is accurate. So while the NASDAQ has been an uptrend and you could get in based on price, what it doesn't tell us is how strong that trend is. And if we find random stocks, should we be going in on those random stocks, or should we be a little bit more robust about it? Personally, I like to be a little bit more robust about it. So, how do we be more robust? One of the ways is by checking the quality of stocks. So, here are some of the stocks that have been coming up, and let's go to not the open trades. Well, we'll talk about some of the open trades, but let's flip through some of the stocks that are setting up as of today, right? So I'll flip through some of the better ones first here, right? So KEX was one of the better names, and even though this was one of the stronger setups, I don't really like this one, right? And there's a few reasons why I didn't like this and why I took a pass on it. One of the reasons why has to do with the volume down here, right? So the price action itself is good. The price action is tightening up and it's starting to turn back up. So if you're a price action trader, you might like this. You might like that kind of breakout. You might like this upside reversal here. Why would you like that? Because it gives you two very clear lines in the sand, where to enter and where to place a stop if you're wrong. Start mixing in some other elements though, and it's not quite as good. If you have all this volume over here on the right side, that is telling us that there's some indecision that's happening right around here, right? Because if price is staying stable and supply is coming to market, then that's telling us that, hey, there's still a lot of interest around these levels. So if there's a lot of people that are coming in and buying and selling at a certain price, then the market's unlikely to move at that price, right? Because there's still a lot of interest at that particular price. But if volume dries up at a particular price, then that's one of the things that can tell us that the market could be ready to move. And if price does start to move and then we start to see a surge in volume, then that's telling us that, okay, the market has finally picked a direction and this is the direction that it's going to be. That's how price and volume can start to work together. And because I'm seeing heavy volume over here and prices moving flat and tight, it's telling me that there's a lot of interest at that price. And so it's not quite ready to move yet. Let's take a look at some of the other ones here. Right? This was another one that was starting to form a cup and a cup-shaped base. But this one too, this has some problems with it. One of the problems being that if we were to just trade off of price, perhaps you're looking at this upside reversal and you want to get in above it with the stop below it. Well, that's a fairly wide bar. Are you going to be able to get the bang for your buck out of this? In my opinion, no. Right? We want tighter action. One of the ways we could tell if the action is tight is by these squiggly lines over here on the chart, right? Those are all moving averages. When they're nice and tight, that's one of the ways to quickly visualize, is the price action tight? Well, take a look at the moving averages. Are they all bunched up and nice and tight? That's telling us that there's some confluence around certain areas. When they're fanned out like they are, you don't have that confluence. So we've seen two stocks so far. Let me know if there's any names that you want us to bring up. I see somebody is saying that he only does forex. That's okay. The same kind of stuff, same concepts apply. Same concepts apply. Let me know if you guys have any questions. I'm just flipping through Instagram right now. It looks like that was the only thing that came in so far. How about you guys over here on YouTube and on X? Let me know that you're alive and doing well. Aside from Kex, aside from PPC, those were some of the better ones coming into today. This one with CLBT, this is maybe this is shaping something up, but again, the volume action isn't quite right. So if it's not quite right, if what I'm seeing on the charts isn't right, then I'm sitting waiting, right? So one of the things that having multiple layers of confluence does for us, it helps us be patient. It helps us verify should we be taking a trade or not. Most of the time the answer is not, right? So I trade stocks. There's 10,000 different stocks in the market. I start out by narrowing the list down to about 300. Then I'll go through that list and I'll see which ones are setting up in the types of patterns that I like. I'll typically narrow the list down from about 300 or so down to maybe about 30. And then from there, assess okay, I found patterns. Are they setting up in quality patterns? That's what we just looked at in a few of these. Right now, I'm not finding quality. And if I'm not finding quality, then I am not placing trades. Why? Because I don't know about you, but I work hard for my money and I don't want to just toss it into any old trade, right? Well, we're not here to gamble. We're here to make money. And because we're here to make money, we want to put our money into high quality trades. That's the difference between being having a trading business and having a trading hobby. Simple as that. Yeah, so let me know if you guys have any other questions because other than that, there's not a whole lot to discuss today. And the market is simply biding time. It's a holiday week. The market is closing early today, closes at 1 o'clock. So there's not a whole lot of activity. It's a couple of trades that I'm in right now. Let's go through the ones that I'm in. So I'm in Cyber Arc. This one here, still biding time near its highs. Not much to do with it. It's in a decent trend. I'm in this one here, MFC. I'm just trying to make the chart a little bit better here for you guys over on Instagram to see. This one too, decent uptrend starting to break out or follow through, I should say, a little bit today. And then there's this one here, ESTC consolidating near its recent highs, above its moving averages, and that's it. No, sometimes there's times to be very active in the market, other times there's not. And if you're swing trading, all you need to do is hop in after the market's closed, check what happened, and track what happened. Right? A lot of it is tracking data. A lot of it is preparation. And then when you see the right setups, then you place your orders and then you let the magic happen. A lot of it is sitting and waiting. And we're in one of those times now where it's sitting and waiting. So that's basically what I'm doing here. So that's really all I have for you today. I'm happy to sit and answer questions about anything that we covered or answer other questions that you might have. But aside from that, we'll probably end things a little bit earlier today. Yeah, so let's go through the chat and see what you have. Thoughts on Mara? Well, let's pull up Mara. Question from Alex over on Instagram. All right, let's reset this chart. This is one of the challenging things with streaming vertically. You guys can't really see this chart too well. Maybe if I zoom, yeah, if I zoom in like that, then you have the same problem as if I do it vertically, which kind of stinks. But it is what it is. So Mara attempted to break out, yes, not yesterday, on Monday, and it's pulling back in. It's important to identify support and resistance. And there's really just a handful of ways to identify support and resistance. You could either draw a trend line, right? Like take a trend line like this and draw it down this way. On all my older annotations just popped up, right? So there's this trend line. There's one in the middle of the base. It broke out. You can see how it broke out over here on Monday. That's great. But then you have major areas, right? And we'll draw a horizontal line right above the major area. We'll let's make this line a bit thicker, right? So there's a thicker line for us. So why is this one major and this one minor? Because this one's in the base and this one is at the top of the base, right? So this one here is longer. It started from the middle of May to now. And yeah, it's going to take price a little bit more to get through that area. Price got through the first pivot, attempted there, and now it got smacked all the way back down. So if I'm trading this and let's say that you got in right here, right? And one of the great things about Mauer is how volatile it is. So price ran almost 11% on Monday. So you could have taken some profit there. Hopefully you did. Now it's pulling back, and I personally, I don't like to buy on pullbacks. My podcast companion, Dennis Wilborn, he loves to buy on pullbacks. So I would be curious if Dennis is buying right here. But for me, I like a fresh breakout. So I would have been buying on Monday. He might be buying here. The next time that I would be looking to buy, I would look to see if this continues to consolidate. I'd also look at it on a 30-minute chart. So let's bring up the 30-minute chart. And I like to look at the 30-minute because sometimes you'll find a nice tight area to buy in, right? So we don't have that yet. Price gap down today, gap down at the open, right? Like an intraday gap. You can't, if you can't spot a gap on a daily chart, then I don't consider that a real gap. But over here on the 30-minute, yeah, you have a little price gap on the 30-minute. Fine. So price comes in, and now it's trading right around the 10-day exponential moving average. Make the chart a little bit cleaner here. So it's trading right around the 10-day exponential moving average. And here's a trick that I like to do. I like to keep the daily moving averages on my intraday charts. That's like taking a magnifying glass and looking at the chart. Uh, So all these moving averages here, that's a 5 EMA. The green one there, that's a 10 EMA. It's from the daily time frame. You could do this real simple on TradingView. If you pop open your moving average and you go to the little gear icon, you just go to indicator time frame and you could select whatever time frame you want. I like to keep it from the daily. It's a little trick there for you. So I don't think this is actionable yet. Um, if you're somebody that likes to buy right off of the moving average, maybe it pops that way, but now we're starting to get into the realm of, hunting for a trade. The main thing that you want to do is have setups that you've clearly defined that, okay, here's exactly what I'm looking for, Right now, when I'm looking at Mara, it doesn't fit any of the things that I'm exactly looking for. It did the other day, right? Well, when we were looking at the daily chart, it did the other day back over here, but it's not ready yet. Those are my thoughts on Mara. So uh, hopefully that answers some of your question. Did so? Looks like Alex that you didn't take a profit in Mara. Okay, so you're sitting there, you're holding it. Well, so far it's holding the 10 EMA. If I'm still in this, my stop is probably at break even, especially if I bought over here on Monday. Yeah, if it's me, I would have sold some into strength over here. I probably would have sold half, right? At least 25%, if not a half, and would be holding the rest, and my stop would be at break even. That way you're free rolling the trade. The risk is out. And then if the stop is tagged at break even, so what? Then if you want to get back in, you could get back in. I would rather free roll a trade than to have open risk on a trade. In fact, that's my first objective. Whenever I enter a trade, objective one, get that initial risk off the trade. Every trade that we place, there's a cost associated with it. The cost is the distance between our entry price and our stop. So I want to take that cost out as soon as I can. Right? There's uh, only two ways that a company is going to have better numbers, right? That they're going to improve their bottom line: more sales or reduce their cost. So I like to reduce my cost as quickly as I can. So in trading, that's how we reduce our cost, by getting our stop to break even as quickly as we can. The other way that we increase our bottom line, have more profits. So lock in gains when they're meaningful, and get that initial risk off the table. So that's what I would be doing with that one there. Do I think it will touch max pain? I mean, I guess it depends on what you consider max pain to be. Um, Rather than saying things like max pain, I'll tell you where I think support is. I think that um, support is down here and down here, right? So I would be looking at a range between 18 and change and 17 and a half. Because at 17 and a half, you not only do you have this bar from June 11th, and let's zoom back a little bit. Yeah, that's the most recent low, right? Unless if you count the recent low from June 24th, but I think that this is a more significant level. And part of the reason why is because you have the 200-day moving average here. And the 200-day moving average has been a point of support. So if I'm getting in, say if I got in on Monday, would I want to allow a retest of the 200? Heck no. Definitely not. And you're saying that it broke a major channel. Well, where's the channel? Is where we drew the line before the channel that you're seeing, right? Is it that line there? Let's get rid of this to help make things clearer. Is this the line that you're seeing and calling that major? I wouldn't call that major, right? That's only been, well, what, a descending trend line for a couple of months. It, it's it's decent. It's decent, but it also has to get above those recent highs. One of the more important things that we all need to do for ourselves, if we want to have longer lasting real success in trading. We need a business plan, right? Well, which goes beyond your standard trading plan of, okay, I'm going to enter here, I'm going to exit here, and here's what I'm going to risk. What you need is a business plan. A business plan is going to tell you all the different setups that you're going to take. It's going to tell you how much you're going to risk. It's going to tell you how you're going to take profits. It's going to tell you how often you should review your trades and what sort of statistics you're going to track. And it's going to give you your emergency plans, right? For when the internet goes out or when your broker's down. You need to have something that's robust like this to tell you every possible scenario for your trading business. It sounds like a lot. It is a little bit too set up, right? Because if it were simple, everyone would do it and then everybody would be successful. And the fact of the matter is that no, not everybody's successful because most people aren't willing to put in the work to write a business plan for their trading. And so they stay trading hobbyists and lose money over time. What you want is a trading business. So write those things out there that I mentioned already. And that'll help you. I'm actually working on a new book to help you write a trading business plan, and I hope to have that book out soon. Any other questions? Any other questions before we head off? Give you guys one more second to get your questions in while I take a sip of water here. Yeah, you guys over on X are always so quiet. We've got a bunch of people watching over on YouTube, and I haven't heard a peep from you guys. So let me know that you're there and alive. Alex is keeping the, or I should say, Alexa. Alexa or Alex? Alex Alkz. Yeah, yeah, it must be Alex. Yeah, Alex keeping the chat alive and going over on Instagram. So thank you, Alex. Looking at it long term, it seems like a solid play. Let's see. So when I look at when I consider something longer term, I always want to look at the weekly chart as well. And you might see the charts that I have up right now. Right, they probably all look small and not that visible, but I have a monthly chart, a weekly chart, a daily chart, and a 30-minute chart. And I always like to consult all four before I place any trade, even though I'm a swing trader. The reason why is because I want to trade with the longer term trends and I want to see where each of these trends line up because when they're all pointing at the same spot, that tends to give us the biggest explosions, right? The biggest moves. And it also helps us to uh, get the odds in our favor. So as far as the weekly chart goes for Mara, yeah, there's this little descending trend line that it started to break above. Well, we drew some of those on here before. Let's clean this up a little bit. It started to break above here. That's decent. I think how it closes the week will tell us a lot. The setup isn't bad. I wouldn't call it great, but it's not bad. You could make some money on this, especially if you're quick. What I'd want to see is follow through right above this level here, right above that $23 level. That's what I would be looking for. Will we get it this week? Probably not. Well, we only have what about 90 minutes left in today's session, and Friday. Market is closed tomorrow for 4th of July, so Friday's session will probably be relatively quiet. Maybe we get some action next week. We'll have to see. Do you use stop limit on options or limit? So, well, whenever I trade options, and so I'll trade options mostly directionally. Every once in a while, I'll sell puts, but I like to use limit orders on on options. I don't trade options with stop orders. Well, whenever I use buy stops, I'll use them to buy shares. And when I place working orders for shares, I'll use buy stop limit orders. So that way I could put it in at the price that I want and walk away. And I'll also have my stop loss order attached to it. And I'll also typically have my first and sometimes even my second plan scale outs all attached to it. So that way I could just type it in and then walk away and it's all set up. Thinkorswim is the broker that I use to set all that stuff up. Not every broker allows you to do that stuff, but Thinkorswim is pretty good. Yeah, uh, even now that they're owned by Schwab instead of TD. All right. Any other questions? By the way, make sure that you guys are signed up to the newsletter. I did not mention that, and that shows you how great of a marketer I am. Right? So go get onto the newsletter if you guys are not on the newsletter already. I'm putting out lots of stuff into the newsletter. Newsletter goes out more or less every day with education and ideas and all sorts of stuff in there, and it's free. So go get that. Um, so stop price versus limit price. Uh, Yeah. So the way that I'll set it up. So let's go back to a trade that I'm in. Or you know what? No, let's talk about Mara, right? Because how would I have traded Mara if I? Let's just say that I traded this, and let's say that I got in, wanted to get in right above this high. So 28 or $20.81 was the high. So let's just say that I wanted to get in at $20.82. And let's say that I wanted to place my stop below that bar, which is 1947. So let's say that I used 1944. Right? So 6% stop, 6.5% stop, which for me too is on the wider side. So I would place the stop, so buy stop limit, I would place the buy stop part at $20.82, and I would probably set the limit. Well, I would set the limit 1% above whatever 2082 is. So I would pull out a calculator and calculate that. So 2082 plus 1% gets us to $21.03. So that's what I would set the limit part of the order on. And yeah, that is basically it. We are now 4 minutes over, so we'll call it a day. So thank you all so much for tuning in today. I hope that you enjoyed this. If you did, make sure that you like and follow and share this with a friend so that way we get the word out to people. And let me know what you'd like to hear on the next show. And if there's people that you want me to try to get in contact with to interview on the show, or if you would like to be on one of these shows we stream several times a week, uh, let me know. Just reach out and drop a comment, send a DM, smoke signal, whatever you need to do to get in touch. And yeah, we'll make it happen. Until next time, we'll be having the Traders Mind Chat show on Friday, so tune in for that. But until then, enjoy your 4th of July holiday and take care, everybody. Much love and God bless.